Hello, everyone. Welcome to session 2. Once again, my name is Michael Curran from the Ottawa Business Journal. It's wonderful to be with you here today during Small Business Week. And as you know, Small Business Week is a BDC initiative. This is, I believe, the 41st ever. Isn't that an incredible number? The 41st ever Small Business Week. And I'm joined here by a few special people, including Catherine Le Teinturier-Guisset. I always need to practice Catherine's name. I guess that's a running joke, Catherine. You need to practice a little bit. But thank you, Catherine. We're going to chat for a couple minutes and then, of course, hand things over to our guest star here, one of the country's leading chief economist, Pierre Cléroux. But let's chat for a couple minutes, Catherine. How are you doing today?
Very good. Very good.
You have a busy Small Business Week. In fact, you and I were on an ESACS event last night and had a chance to chat. It's been, the BDC's playing, as we talked about, a pretty important role, isn't it, during these times? There's many entrepreneurs who are being challenged, and BDC is having to step up in a pretty big way.
Yes, we did. And we were happy to do so, to make sure that we help our entrepreneurs. That's our role. So yes, we had to, on March 16, like everybody else, we went home and we had to step up and make sure that, we came up with a program and make sure that we could roll it out to our entrepreneurs. Yes.
Catherine, I should point out that your job here is on the front lines. You're a business center manager for BDC. So yes. You're right here in our city dealing with a lot of local entrepreneurs. So we thank you for that work. We got Pierre, of course, the Chief Economist and VP Research for BDC. Pierre, it's wonderful for you to be here. It means a lot to us that you're back in 2020, in a sense, when we need you the most, Pierre.
Thank you, Michael. I'm very happy to be here. It's quite different from last year. Last year, we could see people, and but because of the pandemic, everything has changed. So I'm very happy to be here today.
Yeah. So, Catherine, why don't we kick things off by giving you giving all of our audience a proper introduction of our guest star here.
Yes, for sure, for sure. So on behalf of BDC and the Ottawa business team, I want to say how proud we are to be a sponsor of the Small Business Week and the Ottawa Business Summit, and for the small BDC Small Business Week. So as you saw on the presentation, the theme for this year is Forging the Way Forward. It reflects the reality facing Canadian entrepreneurs as they navigate the fallout from the COVID crisis. As you can imagine, at BDC, we have talked to so many entrepreneurs this year since the pandemic began. And even though the past months have been the most difficult for, in recent history for our Canadian entrepreneurs, we have seen our entrepreneurs demonstrate courage and resilience. So for Small Business Week this year, we're taking time to recognize their incredible resilience and capacity for innovation. We're also here to help you understand how the business environment has changed and what you can do to build a future in these circumstances. So on that note, I would like to introduce BDC's Chief Economist, Pierre Cléroux. Sorry, I have my paper I have to read. So Pierre was appointed Vice President Research and Chief Economist at BDC in 2012. He leads a team of experts who analyze economic data to identify business and sector trends impacting Canadian entrepreneurs. We are very pleased to have Pierre join us today, although he's well known in the Ottawa business community. And he's going to provide us an overview of the economic situation and outlook for the future, as well as insights from BDC's latest research on how entrepreneurs are adapting to this new reality. So welcome, Pierre.
Thank you, Catherine.
Take it away, Pierre.
Thank you. I'm going just to share my screen. this is, I'm very happy to be here today. And this is, just give me 1 second, I'm going to share my screen. So very happy to be here today. Like I said to Michael before, this is quite different from last year where we were all in the same room. But I think, hopefully this presentation will be useful for you as well. So my presentation has 3 parts. First, I'm going to talk about the current economic situation, where we are in terms of the recovery. I'm going to talk also about the next 12 months. So what should we expect? Second part of the presentation is about a new research we did very recently on how consumer behavior are changing. The pandemic had a huge impact on the economy. So we wanted to understand if consumers are reacting the same way than before. Finally, Catherine talked about it. The topic of this conference is about looking forward. So we asked 1,000 entrepreneurs across the country, what are their priorities for the next 12 months? So I'm going to talk about that in the final part of the presentation. So first, let's talk about the economy. The world economy is in recession. The contraction this year is going to be 4.4%, and we expect a rebound in 2021. As you can see from this graph, COVID-19 had a huge impact on the world economy, on every economies around the world. China is the only major economy is going to have positive growth this year, and growth is going to be much lower than what we have seen in China over the last few years. The reason why China is able to have positive growth is because of their manufacturing sector, which is very large, very important for the economy, and which is actually already being back to the pre-crisis level. So this is really helping the country, the economy to recover. But other large economies like the United States, Germany, Japan, Canada, all these countries are going to have a contraction this year around 5%. And some other major economies like France, United Kingdom, Italy are going to struggle even more. Contraction is going to be more around 10%. So as you can see, COVID-19 had really an impact on every economies around the world. When the world economy is slowing down, this is having an impact on commodity prices. And as you know, in Canada, commodities are an important part of our economy. We have a very large mining sectors in almost every provinces. And of course, we have a large oil sector that is very important for the Canadian economy. About 20% of everything we export is oil. So I know in Ontario, we're in Ottawa, we're not producing oil, but I want to show you the impact of this sector on the Canadian economy. So the oil price started to decline way before the virus hit Canada. It started to decline right at the beginning when China was hit by the virus. And as the world started to go into a lockdown, the world price declined very rapidly. It was even negative for a few days. As the world economy reopened, the oil price came back. But as you can see from the graph, the level today at $40 a barrel is still quite below what it was in February at $60. The reason for that is the world demand for oil is still 10% down. And that's explaining why we have a lower oil price. Lower oil price means less economic activities in some part of the country, like Alberta, Saskatchewan, and Newfoundland, means much slower investment across the country. Also mean that the recovery for Canada is not going to go as fast because some important sectors, and oil is not the only one, but oil is going to slow down the recovery for Canada. So in terms of the recovery in Canada, this is how we see the situation. We see this pandemic into 3 phases. The first one was the lockdown, and this is behind us now. Phase 2 is the initial recovery, is when the economy reopened, businesses are able to reopen, they are also able to rehire people. And finally, phase 3, which is a late recovery, is the recovery that is going to take us to the pre-crisis level. So in the next few slides, I'm going to talk about phase 2 and phase 3. So this is where we are now. We are at 94% of the level of economic activities we were in February. So as you can see, these are real numbers of the GDP. You can see that during the lockdown, the economic activities dropped like a rock. And as the economy reopened, well, the economy started to regain again. If we look in terms of jobs, the Canadian economy lost 3 million jobs during the lockdown. That's very, very significant. It's only in 2 months. But we have recuperated 76% of these jobs over the last few months that the economy has reopened. So this is actually a very strong recovery, stronger than what we expected before. If we look by sector, some sectors are already back to the pre-crisis level. So finance, insurance, and real estate are 100% the level of job they had in February. Manufacturing, 99%. Wholesale and retail trade at 96%. In general, in Canada, we are at 96% the level of jobs we had in February. But some sectors are struggling to go back to the pre-crisis level, mostly because they have restriction. For example, accommodation and food services are only at 85% of the level in February. And as you know, accommodation and food services depend a lot on tourism. Our border is closed. There's a lot of restriction on restaurants in some part of the province. Restaurants or inside dining is closed. So that's explaining why these sectors are going to take more time to recover. But the initial recovery in Canada has been strong. We are at 96%, the level of jobs that we had in February, which was quite better than the United States, which is only at 93%. So this initial recovery period in Canada has been quite strong, but we're not done yet. We still have about 700,000 jobs that are missing. So we're not back to the pre-crisis level. I'm going to talk to you a bit about Ontario, and the situation in Ontario is also improving. The lockdown was hard on the number of jobs. The unemployment rate went up very, very significantly, but actually the situation is improving. And in September, the unemployment rate is actually down to 9.5%. So again, the initial recovery has been strong in Ontario, but we still have a long way to go before we go back to the pre-crisis level. In terms of job, well, there's some good news. Manufacturing is at 102% the level of job than we were in February, which is actually very good for Ontario. And it's actually the highest in the country. Finance, insurance, and real estate are 101%. In general, in total is 96%, which is exactly the same level then for the Canadian economy. Again, here, no surprise, accommodation and food services have the lowest rate of employment right now, which is not surprising because there's a lot of restriction on these sectors. Transportation is also low, but transportation includes airline industry, so you won't be surprised that it's lower than other sectors. So in Ontario, just like in Canada, the initial recovery has been strong. Some sectors are already back to the pre-crisis level, but some sectors are going to take more time to go back to that level. In terms of the manufacturing sector, well, we look at automotive, the curve is quite interesting. The lockdown was very hard on the automotive sector. The GDP or the economic activities dropped very seriously, but it came back very strongly as well. So that's what we call a V-shaped recovery. And that's explained why the level of job in the manufacturing sector is now 102% compared to February. In terms of retail sales in Canada, we are at 102% the level of February. So that's quite surprising, interesting, that it's actually higher today than it was in February. In Ontario is 99%, so almost 100%. It's not the highest in the country. It's a bit lower than other provinces. In terms of restaurants, it's also lower in Ontario. The restriction on restaurants, especially in the Toronto area, has been there for a longer period of time. So that's the reason explaining why in Ontario, the level of the restaurant is a bit lower than the Canadian average. So the initial recovery, both in Ontario and Canada, has been quite strong. Like I said, stronger than what we expected in March, and it's stronger than our neighbor, the United States. It's actually stronger than most developed economies. So this is a very good point. But we're not done yet. We're still below the level of economic activities in February. So what should we expect for the next 12 months? So in the next few slides, I'm going to talk about that. So after an initial rebound that was strong, we believe the recovery is going to slow down in Canada. So in the next 12 months, we're going to have positive growth, but the pace of growth is going to be slower than what we have seen over the last few months. And there's 4 reasons for that. First, the pandemic is not over yet. Second, consumers will remain cautious. Third, business investment are going to be lower this year. And finally, 4, key sectors of our economy will take a longer time to recover. So the first reason why we believe the rest of the recovery is going to take a little bit more time is because of this graph. This graph is showing you the daily new cases per million people in Canada. As you can see, we had a large number of cases in the spring, and many governments in Canada, all governments in Canada, decided to put the economy under lockdown. The summer was really good. We had a low number of cases, but as the fall came, September, people went back to their workplace, kids went back to school, and as a result, we have an increase in number of cases. This is important because this has the potential to delay the recovery that we're going to have in Canada. If we are able to control this second wave, and governments are working very hard to do that, we will have a fastest recovery than if it's going out of control. So this is the biggest risk that we have for our economies, our ability to control the number of cases during this second wave. Another reason why we believe the recovery is going to be lower is because consumers remain cautious. Despite the fact that the economy is reopened and many Canadians have recuperated their job, well, we can see that consumers are remaining cautious. They are financially cautious. So saving rates in Canada is increasing it's very high, and people are not spending as much as they should. For example, yes, retail sales has been back in terms of, but the reason for that is a strong transfer, government transfer to Canadian. But still, in our research, Canadian consumers are saying that they're going to be careful with their money. The third reason is business investment are going to be lower. We keep track of business investment intention every quarter. And in January, actually, the results were really good. We thought we'll have more business investment this year than last year. But of course, everything changed in April. Now this number looks really negative. We're going to have less business investment in Canada this year than last year. And this is important because business investment represents 20% of the Canadian economy. So it's going to take some time before businesses have the capacity and also the confidence to reinvest in their business. So business investment is going to slow down the recovery. Finally, some sectors of our economy are going to struggle to go back to the pre-crisis level, and this is going to slow down the Canadian recovery. Here, what you have is our forecast by sector. So at the top of the graph, on the right side, you have the sectors that are where the recovery has been the fastest. So pharma, ICT, retail, food manufacturing, all these sectors are back to the pre-crisis level. But that's not the case for all sectors. If you look on the other side of the graph, in the yellow zone, you can see the sectors that are going to take a little bit more time. Well, of course, everything related to tourism, like accommodation, restaurants, and air transportation are going to be the last sectors to recover. But also other important sectors like aerospace, oil and gas, automotive has been doing very well, but we expect to slow down. So this is going to take a little bit more time. These sectors are very important for the Canadian economy, and that's the fourth reason why we believe that the recovery is going to be a little bit lower. So this is our forecast. This is how we see the final part of the recovery. Today, we are at the end of the initial recovery, which has been doing quite well. but the rest of the recovery is going to take a little bit longer time. And like I said, it's going to depend on the number of cases we have of COVID-19. So we have two scenarios. One is an optimistic scenario. Let's say that we can control the second wave and we don't have to put the economy under a lockdown again, and we find a vaccine in 2021. We believe that the Canadian economy is going to go back to the pre-crisis level at the beginning of 2022. But if we don't control the second wave and our government are forced to put some sectors of the economy under a lockdown, well, this is going to delay the recovery. And we believe that it could be delayed up to 2023. So today, with the information we have, with the data we have, we're still confident, we're still optimistic that we will be able to control the second wave, and we're going to have a vaccine somewhere in 2021. So we believe that the economy, the Canadian economy, will go back to the pre-crisis level at the beginning of 2022. The second part of the presentation is about consumer trend, consumer behavior. So we did a number of studies this summer to understand how consumers are changing their habit, how they're changing their behavior. Are they shopping the same way than they used to before this pandemic? And we had four conclusions or four trends. The first one is Canadians are still very cautious about spending money. Saving rates in Canada has increased very significantly. And despite the fact that retail sales are good, there's no doubt that Canadians are saying to us that they are going to spend less in the next 12 to 18 months. About 24% Canadians are saying that they are going to reduce their spending. Second trend is on the online business. 32% of Canadians are saying that they are planning to spend more online in the next 12 to 18 months. And as revenue is increasing, well, this ratio is even higher. So the pandemic has changed the game for the online business. The online business is not a new phenomenon. It's not a new trend. People have been buying online for years now. But really, the pandemic has changed the game. The pandemic has accelerated this trend. The online business has doubled since February, and this is not going to slow down. In our research, consumers told us that a lot of consumers, 50% of Canadians said that they bought something online for the first time during the pandemic, and actually they liked it. They saw the benefits, and they saw also it's not too complicated. So 82% of them said they will continue to do so. So we believe that this trend of buying online is just going to be stronger than ever before. Like I said, online business has doubled since February. And we believe that even at the end of this pandemic, we're going to continue to buy online massively. The third trend is Canadians want to buy local. They want to buy local products, local services. They want to buy from Canadian companies. And 83% of consumers are saying that they are even willing to pay more for these local products. This is a new phenomenon. Canadian was not so keen on buying local before, but Canadians understand that it's important during the pandemic, during the slowdown of the economy, to have a positive impact on their community. So they want to buy locally. You have probably noticed over the last few months that many Canadian businesses market themselves as Canadian companies. So obviously they saw the same result that we did. I saw a furniture store who give you 15% rebate if you buy Canadian-made furniture in their store. So there's something to market your business that you are a Canadian company and maybe better market the Canadian products that you have. Finally, Canadians are very cautious about their health at this point, and it has become a choosing criteria when they make a decision to what they buy and also which store or which business they are going. I know a lot of Canadian companies have spent money and a lot of time and energy to make sure that their environment is safe for their employees and their clients. That's exactly what Canadians are looking for right now. Of course, this is a new trend, but people are cautious about their health, very worried about this virus. So this is a very important concern for them. So as you can see, our business environment has changed. Consumers are putting value on different things that they used to. First of all, they are cautious with their wallet. They're not going to spend as much in the next 12 months. Second, they like to buy online. They're going to buy online more in the future than ever before. Third, they want to have a positive impact on their community. So they're looking for local products or buying from local or for Canadian companies. Finally, they're also cautious about their health. This is a very important concern for them. So as businesses, we have to make sure that they feel safe when they visit our store or our business. The last part of the presentation is on the business side. During the summer, we talked to more than 1,000 Canadian entrepreneurs to better understand what are their priorities for the next 12 months. How are they going to get out of this difficult period of time? As you know, the pandemic has really a strong impact on SMEs, on small and mid-sized firms in Canada. 76% of small business reported a decrease in sales since the beginning of the pandemic. 44% has to reduce their staff. This is very important. Almost 50% of Canadian businesses has to make some layoff. 76% have seen the profit decrease. And finally, 39% of businesses had to take more debt to go through this period. So as you can see, the impact on business has been very strong, has been very important. So that's the reason why we interview about 1,000 entrepreneurs across the country, in every sector of the economy, in every region. We wanted to understand how the pandemic is changing their priorities. We realize that entrepreneurs has been innovative and has been really adapting to this post-crisis challenges. They changed their business model in some cases. They really focus on surviving during this difficult period of time. So they have set to themselves 5 priorities for the next 12 months. The first one is to improve their financial situation. 39% told us that this is the #1 priority they have. They want to improve their financial situation. And how are they going to do that? Well, first, they want to reduce their operating costs. Right from the beginning of the pandemic, we saw many businesses focusing on reducing their costs because their revenue was dropping like a rock. Second, they want to improve their cash flow management. This crisis was not, of course, nobody could predict this, and it was very quick. Very, very rapidly, many businesses had to close their business. So obviously, cash flow management was a big issue. Third, they want to reduce their debt. Like I said, almost 40% of Canadian businesses has increased their debt to go through this crisis. So one of the first priorities is to reduce the level of debt. And some of them also want to set up a contingency fund for the next difficult situation. So first priority for Canadian businesses is to improve their financial situation, and they're really keen on that. Second priority surprised me a little bit. They want to invest in technology to make their business better. Why it surprised me is because at BDC, we have been talking about technology for a long time. We never saw such a momentum in investing in technology, despite the fact that this situation is quite difficult. Why they want to do this, why they want to do this is they want to focus on increasing technology to increase their efficiency, to improve their productivity, to reduce their costs. Some want even to invest in technology to reduce their need for employees. So they believe that technology will help them to make their business more efficient, which according to our research, they're rightly so. Third, they want to focus on teleworking. And of course, the pandemic has forced many companies to encourage their employees to work from home. Many companies have invested over the last 6 months to make it easier for teleworking. What is interesting is the perception of entrepreneurs in Canada has really changed. I can tell you in our research, 6 months ago, before the pandemic, there was not a good perception about teleworking. But this perception has really changed over the last 6 months. Entrepreneurs believe that teleworking is good for innovation. It's actually increasing employee productivity. It's increasing employee motivation. So many entrepreneurs believe now that this is going to be a way of the future. So at the end of this pandemic, we believe that teleworking is going to be higher than before. We're not going to go back to the pre-crisis level. And as you can see at the bottom of the slide, 18% of entrepreneurs believe that their workspace will decrease in the future. So this is just like the online business. This is a new trend. This is going to change our business environment after this pandemic is over. Businesses realize the benefits of teleworking. I'm not saying that teleworking is going to be as popular as what it is now because of the pandemic, but it's going to be quite different than what it was before. The perception has changed among entrepreneurs. The fourth priority is to increase their online presence. We saw on the consumer side that more and more Canadians want to buy online. And like I said, this is not a new trend, but it's really, the pandemic has really accelerated this trend. Well, entrepreneurs got the message. They want to invest more in technology to increase their situation online. They really saw the benefits of being online. So they want to improve their company's website and add new feature. They want to increase client experience on their website. They want to be more active on social media. They want to launch promotional campaigns. They want to increase their online advertising. So companies who were present online, they actually performed better during the lockdown. But it was already the case before that. Our research over the last few years are showing that people who are selling online, they perform better than other companies. So, like I said, this is not a new trend, but there's a real momentum right now, and entrepreneurs want to benefit from that. Finally, the last trend or the last priority for businesses is a bit of a surprising one. 25% are saying that they want to grow their business during this difficult period of time. And the first reason is quite interesting, is they want to survive. They believe that by exploring new markets, by having more diversified client base, or by having more product lines, it's going to be easier for them to go through this difficult period of time. So this is actually quite interesting. Diversification is a key element of success, and many entrepreneurs realize that right now. So 25% are looking to expand their business. They are looking to expand to new markets, to expand their product line. Even a percentage of them are looking to buy another company to make their company more solid. So 5 priorities. First, to improve their financial situation. That's by far the first priority. Also, second, they want to take advantage of technology, which is, I think, very encouraging, very positive, because our research are showing that businesses who are adopting technology perform better than others. So I find it very encouraging to see that so many entrepreneurs want to invest in technology in this difficult period of time. They want to focus on teleworking, which is a new trend. Really, the perception have changed. They want to sell more online, take advantage of this online business. And finally, 25% said that they are looking to grow their business even during the time of the pandemic. So in conclusion, the Canadian economy recovery is well on the way. The initial recovery has been strong, stronger than what we expected in March, and stronger than other developed economies like the United States. But we're not done yet. We still have some way to go before we go back to the pre-crisis level or to the normal situation. The way we handle the virus is going to really be critical in terms of how fast we're going to go back to normal. If we're able to control this virus, we believe that the Canadian economy should go back to the pre-crisis level at the beginning of 2022. So I'm going to stop here, very open to questions.
Hello, Pierre, again. Nice job. You know, one of the things I always enjoy about your presentations, Pierre, is you deal with those macro issues, but then you bring it right down to very kind of actionable measures. So we do have a few questions here, Pierre. And the first question is, it comes from a clothing retailer. And I think it's as much of a point as a question. You'll understand why I say that. She's noting that a lot of economists are making comparisons to the pre-pandemic month, which was February, and looking at a recovery in various sectors, February to February. And she's pointing out that February sales, if you're a clothing retailer, aren't very good. So a recovery February compared to February might not be as robust as you think. But I guess it's part of the trick of making comparisons in this never before seen, potentially besides the depression, plummeting of the economy. And we have a question. You won't be surprised by this one. It's a question about the national debt, Pierre. So, of course, the deficit has soared. I believe we're well into the 300 billion mark. What do you think the long-term impact of that type of deficit and the accumulating national debt will mean moving forward?
Well, there's no doubt that our deficit this year has increased significantly, and it's by rebound is going to increase our debt. But there's few good news. The first one, interest rates are very low, so which is going to help in terms of financing this. The other good news is we have a very good starting point. In February, I'm sorry to use February again, but in February, just before the crisis, there was a case, at the end of 2019 as well.
Yes.
Our debt to GDP ratio in Canada was 30%, which was the lowest among the G7 countries or the most developed economies. For example, the United States is 100%. So our starting point was really good. So the fact that we added a lot of debt actually is not as bad for us than for other countries. 6 months later, our debt ratio is not 30%, it's now 50%, because as you said, we has increased our spending quite a bit. We're still the lowest with Germany now. So we're not the lowest by ourselves, but we're still the lowest with Germany. So my point is, we spend a lot of money, but you can argue that actually was a good time to do it, because a lot of the economy really went down for a few months. The economy is coming back strongly, and the fact that this money probably helped, that we have a stronger recovery so far than the United States. And there's no doubt the program, that was a transfer to many Canadians has helped the recovery. So having said that, at one point, we'll have to deal with it. I think we'll deal with it in a different way than in the past. Remember, we were focusing a lot on balanced budget. I think we're going to we will have to live with a higher deficit and a higher debt for the next decade. It's going to take some time before we are able to rebalance our budget, because the shock on the economy was so severe.
The next question probably isn't too surprising, and I think it's one of the key questions that many business owners are asking these days. You talked about telework and noted how important that's become, and equally important, maybe, Pierre, you noted how you believe the teleworking trend will continue even after the pandemic ends. If you were to look forward or gaze into your crystal ball, as we often say to economists, what is the medium and long-term ramifications of that? So if we all have more flexible work schedules, if we're working from home on a more frequent basis, what do you believe that will mean, Pierre?
I think it would mean that I think at the end of the pandemic, people are going to go back to their workplace, but not in the same way than in the past. A lot of on the people side, people realize, well, there's a lot of benefits of working 2 or 3 days a week from home, because a lot of Canadians are commuting quite a bit to go to work. And it's the case in Ottawa, where people are sometimes commuting 30, 35 minutes, even 45 minutes. and it's the case in Toronto and Montreal. But also, what is new, I find, is the perception on the entrepreneur side is quite different. I can tell you studies we did in the past, there was not a lot of motivation from entrepreneurs to let their people work from home. They realized during the pandemic, I'll give you a specific example I thought was very funny. I was speaking to a Chamber of Commerce in Canada. I won't name the city, but there was, before the conference started, I was talking to the people who were on the board of that Chamber of Commerce, and there was the leading law firm of that city. And the gentleman was saying that they never believed in teleworking before. They was not encouraged, was almost discouraged, and that was not the way they were doing business. But of course, during the pandemic, everybody worked from home, and they realized that when you're a lawyer, well, you can really work from home. I mean, you don't have to go to the office every day. And he was saying that, wow, we are changing our perception. We're really changing the way we're going to do business after this pandemic. So I think this is really what is going to happen. I think we're going to have a new balance. We won't go back to the pre-crisis level. Probably we won't work from home as much as today because the restriction will be over at one point. And this is going to have an impact on our downtown area. It's going, in the short term, it's going to be difficult for our downtown cities because a lot of people are going to work downtown. Ottawa is a very good example of that. I used to work in Ottawa. The Ottawa downtown area is almost dead at night and on Saturday morning. But because people they are actually investing right now in their home outside the city. But in the long run, it's going to come back because our economy is growing. So our downtown area are going to be vibrant again, but it's going to take some time.
Pierre, I also wanted to ask you a question very specific to the Ottawa economy, and you referenced that you've spent some time in the city. Ottawa is different from other cities. Let's just use the example of Calgary, for example. It's very dependent on the oil market. Many business people and entrepreneurs in Ottawa would feel that we have this giant cushion around the private sector because of the dominance of the public sector, in fact, in our city. So as you know, with so many federal, provincial, municipal, and that whole mush sector, so going to hospitals, universities, colleges, for example, how important do you think that will be to Ottawa maintaining a sense of stability through the pandemic, but equally important, Ottawa's ability to rebound?
Well, this is actually not negative, it's positive. Every capital has this, it's avoid fluctuation of the economy because you already have part of the economy that is more stable than the private sector. Well, Ottawa is much more than that. As you know, the technology sector is very important in Ottawa, and we have great example of some startup who has become major companies. So the technology sector will continue to be very strong because what we are seeing, first of all, the technology sector in Canada has been the sector who has been growing the most over the last 10 years. Every year, the growth is 5% every year over the last 10 years. Wow. And this is not going to slow down. This is just going to accelerate because what we see is business are investing more in technology than ever before. They used to invest more in equipment, in buildings, but now to be competitive, to improve your business, you have to invest in technology. So technology sector is just at the beginning of a big explosion in the next decade, and Ottawa would benefit from that because you already have a strong base that has been proven over the years. So companies like Shopify it's already a success, and it's just the beginning probably because the online business is really blooming. So I think it's not a bad news to have government jobs because it helps the stability of your economy, but the important part is to build on it. And Ottawa has been successful as doing that especially with the tech sector.
I like that answer. You know, there's a foundation there with the public sector, but we can't rest on our laurels. We need the private sector, potentially in Ottawa, led by technology to lead the way out. Ron Smith from Keynote Search has a question for you that is connected to a vaccine, more specifically, what the effect of a delayed vaccine might have. So, you know, there are these questions that we might, let's hope, get the vaccine in 2021, but then how long does it take for mass inoculation, and how long does it take for, you know, whatever our population base, 35 million Canadians, to get vaccinated? Do you have any concerns about the length of time it will take to implement a vaccine program?
Well, you know, I'm not an expert in vaccines, so I'm not going to comment on the when we're going to get a vaccine. What I read is some people are optimistic that we will get one in 2021. The delay will have a bigger impact on some sectors of our economy. Like I showed, for example, in Ontario, manufacturing sector is already 102% of before the pandemic. So the manufacturing sector in general in Canada has been, you know, recuperating in a good way. But vaccine will be key in terms of restaurants, accommodation, air transportation. This sector that is around tourism will never go back to normal before we have a vaccine. It's as simple as that. So if we delay the vaccine, we're going to delay the recovery of that sector. And this sector is important for the economy. It's very important in terms of jobs. We forget, you know, that there's a lot of jobs in hotels, in restaurants, in traveling. You know, Canadians are big travelers, and so this sector is really in difficulties right now. So that's how I see the impact of the vaccine. If we delay, for some reasons, the vaccine is not coming in 2021, well, this will delay the recovery of some of the sectors.
Pierre, I wanted to ask you a question about manufacturing. You just referenced it there a minute ago. It seems for the last several decades, we've been more and more comfortable as a country to offshore our manufacturing. And when the pandemic hit, of course, there was a shortage of things like PPE, personal protective equipment, and it suddenly became a political priority to ramp up local or national and regional manufacturing. I'm curious to know if you think that whole offshore trend of manufacturing will continue, or is this a temporary speed bump, or do you actually think we will have a concerted attempt to have more onshoring of manufacturing in years to come?
It's a very good question. In March and April, we thought that we will see more reshoring. And actually now in October, we don't see that in the numbers. Actually, the export import has been back to normal now. So we were hoping to, you know, because if you produce more in Canada, you create more economy and more jobs. We were hoping that the trend would change, but actually it hasn't changed. We're still, we're back to, and the reason for that is, first, we live in a very global economy. And so there's a reason for that, because there's some advantage to buy some products from outside Canada where the cost of producing them is lower. And the pandemic has not changed that. Having said that, Canada is still has a strong manufacturing sector. We're still performing very well in everything that is high value added, complex parts, complex products, sophisticated products, or healthy products. For example, something we never talk about, you know, our food processing. It's
Yes.
it's actually the largest part of manufacturing. We don't talk about that. We talk about aerospace, about automotive, about motors, but it's actually it's a growing sector, has been growing a lot over the last 6 months because people eat more at home and everything. It's a sector that is present in every part of the country compared to other sectors, or, you know, it's more in Ontario, more in Quebec. You have food processing across Canada. Also, it's a sector that we are performing well in exporting because Canada has a strong reputation in terms of really high standard. So people like our products because they believe, rightly so, that when you buy something made in Canada, you can be sure that what you read on the label is right, which is not the case in many countries around the world.
Yeah.
So I'm a big fan. I'm still a big believer of our manufacturing sector. We won't go back to produce products that have low value added, and because we cannot compete in terms of salaries, but
Yeah.
we can compete on complex, sophisticated products.
I like your point on the agricultural sector. You're reminding me of a discussion I had with a local vice president of a bank several years back. And he was pointing out to me that we always, and justifiably, put a lot of focus on our technology sector in Ottawa. He said people don't appreciate how big the agricultural economy is across Eastern Ontario. And as you would know, as farms consolidate, sometimes they're doing revenue that is as significant as some medium-sized technology companies. So he said we shouldn't forget the fact that Ottawa really is, across Eastern Ontario, surrounded by a very important agricultural, and that factors into our manufacturing sector. Maybe one last question, Pierre. This one might be a tough one. We've got a big election south of the border happening in just a few weeks there. And there's, I think as Canadians, we're all a little bit concerned about the political situation in the U.S. I know you don't, and no one does, Pierre, know what's going to happen exactly. But any general comment on a potential impact from the U.S. election, what that could mean on Canada?
Yes, if Mr. Trump is reelected, we won't see a lot of change because he has been there for 4 years. So I think it would be pretty much the same. He doesn't really have a program, but he's focusing on reducing tax, reducing spending, imposing tariff, like we all know. So this is going to be, I think, the same. If Mr. Biden has a very specific program, and inside this program, there's something that is interesting for us is he wants to increase taxes, especially on businesses. Mr. Trump reduced tax on business, which made the tax system more competitive for American companies than for Canadian companies. Mr. Biden wants to reverse that, which is a good news for Canadian companies. It means that we will be more on the same level playing field. So if Mr. Biden is elected, we believe that is going to increase taxes, which will make Canadian companies more competitive. The second thing that I believe is a good news, if Mr. Biden is elected, I think he's going to be more stable on international trade. Mr. Trump has imposed a number of tariffs on Canada, very in a very quick way, without a reason, I would say. Tariff on aluminum, on steel, on lumber, which is really unusual. Usually countries, they don't negotiate that way, or they don't impose a tariff because they are upset about something. So if Mr. Biden is elected, we believe that the situation is going to be much more stable. And that will benefit Canadian companies. That will also make it less uncertain to export to the United States. So that's the way we see it right now.
Well, listen, Pierre, we're basically out of time. I want to thank you so much for the presentation. Again, I think you do a great job at giving us the macros, but then pointing the entrepreneurs and business owners in a certain direction about how to react to some of the statistics. I think in large part, Pierre, you had a very optimistic message, of a very V-shaped recovery. We probably have some difficult days ahead. Any final words that would encourage the entrepreneurs and business owners out there? Maybe in a couple sentences or so, Pierre, what would you say?
Well, I know when we watch the media, we often have a very negative perception about the economy. But actually, the numbers are not showing that. In many sectors of the Canadian economy, we're almost back to the pre-crisis level. So this is really encouraging. And I think there's no reason to believe that this growth is not going to continue. Like I said, the pace is going to be a bit slower because we have some sectors who are struggling because of the restriction, but we are optimistic. We believe that, you know, the vaccine will come in 2021 and the economy will go back to normal somewhere in 2022. So the initial recovery has been strong, which give us all the reasons to be confident about what's going on in Canada.
I want to thank you again, Pierre, to you, to Catherine, to the entire BDC team that has played an important role in the recovery. You know, I heard stories here in Ottawa of and across Canada of a deluge of requests for loans to the BDC. And I know in many cases, the BDC team quite literally was working around the clock and on weekends to make sure that cash got in the hands of entrepreneurs in Canada. Your tagline as Canada's entrepreneurship bank really came to action there. So thank you once again to BDC. For everyone on the call, I want to remind you that our third session, you become the presenters. So the third session, which starts in just 4 minutes, is actually a Google Meet with cameras on, hosted by my partner, Mark Sutcliffe, and our two conference co-chairs for the Small Business Summit. So we're going to wrap up the session. Thanks again to BDC. We're going to go on, and it's an open discussion, people. So turn your camera on, and you take the podium, and we'll have a discussion about what it really means to be an entrepreneur. Thanks, Pierre.
Thank you. Bye-bye.
Okay, bye-bye.